Lard Friese is the CEO of Aegon and joins us now. Lard, thank you so much for the time. Appreciate it. I mean, you do have that operating result decreased by 8%, a net loss here of 65 million euros. But as we just noted then, it's that operating capital generation that you expect to be on track to meet your guidance for the year. Won't you just run us through the half?
Yeah, good morning, Karen and Aribile, and thanks for having me back on the show again. We are very pleased to report this morning a strong set of half-year results. Our commercial momentum, especially in the United States, across all product lines has remained very strong. We see the same happening in Brazil and in our workplace business in the UK. There's also some softer spots, especially in China life insurance and in Spain, for instance. But the star of the show of this half year has been our asset management business, which saw outflows last year. And in this half year, 8 billion of new inflows on the back of new clients onboarding in the Netherlands, in the United Kingdom, money market inflows in China, and our partnership with ASR in the Netherlands. So overall, we are very pleased with those results. Our capital position of the operating units is well above their operating levels. Our cash capital position at the holding company is very strong, which allows us to announce today a 14% increase of the interim dividend per share, which we believe is a good proof testament that the strategy that we are implementing for the last couple of years is truly coming to fruition.
Yeah, I just want to talk a little bit about that UK transformation that you've also put in place. Are you seeing further improvement then in your business there? It has been a spot that was a little bit weak as well in that first quarter.
Well, if we look at our UK business, the workplace business is really doing very well. Actually, this quarter we're seeing a record net deposits of 1.7 billion, which is a continuation of a trend in the workplace pension market that we're seeing for already quite a number of quarters for our business. The advisor platform, which is the other piece of our business, is still impacted by subdued consumer confidence and investor confidence in the United Kingdom, and an ongoing consolidation in the non-target advisor market, which is also impacting that. But overall, I would say that the commercial momentum in the workplace business, particularly in the UK, is very strong. Recently, we had our Capital Markets Teach-In event about the UK strategy, where we have laid out our plans to transform our UK business in the coming years and investing in it to ensure that we capture the opportunities of a continuing growing wealth management market in the UK.
Lard, let me ask you about the US business because in the report today you talk about the offset here of a fair value losses in the United States. We knew at the trading update that there might be some lumpiness here as you refocus strategy. Just explain how those changes are playing out and what lies ahead.
We indeed had some fair value adjustments, which is actually a non-cash item, and there's fluctuations that you can see happening more often in quarters. The most important thing for today is indeed an assumption update that we did for our mortality. We usually do that in the second quarter of the year if we review our assumptions. And over the last number of quarters, we saw elevated mortality experience in our results, and we felt it only appropriate to go back to our models and update them. We took a 400 million charge for that this quarter. But the good news is that moving forward, we expect the operating result as a result of this assumption update to increase.
Lard, I want to ask you about the third-party deposits, the inflows here, because we've had market turbulence just in recent weeks. Markets sort of aggressively, as you know, then bounce back, but lying ahead, some concerns around the macro. What impact do you think this is going to have to some of the confidence you've been seeing in the business so far?
Well, we've seen in the last couple of weeks indeed some volatility in the markets. If you look at our hedge platforms, they have performed very well. We are used to managing our assets and liabilities in such a manner that in all scenarios our clients' money is safe, and our hedge effectiveness was 99% as we reported today. So we've got good derivative platforms in place to shield ourselves from this temporary volatility. The overall market in the markets where we are operating, I would say, is the economy, the state of the economy is more a matter of cooling down rather than collapsing, especially in the US, where we still see strong, the economy being very resilient. It will now especially, of course, be important to note what will happen with interest rates. The policy rate cycle, as we know, in the US is at its peak. We expect in the coming weeks, based on new data that we hopefully are going to support that, an easing of the rate cycle to, over time, more neutral levels.
Yes.
The economy itself remains strong, and we see that resilience back in the commercial momentum that we have across our markets.
Right. Lard, let me just squeeze in a quick question on the politics and whether you're concerned about any changes here, because the Labour government, everybody's looking at whether Rachel Reeves could actually change inheritance tax, capital gains tax in the autumn budget, also whether there's going to be a pensions review that brings changes. What sort of policy initiatives are you looking for, and what are you concerned about at this stage?
The American democracy is a vibrant democracy, and then the American citizens will go in to elect their new president. Over the last decades, the many decades that we have our business, Transamerica and the U.S., we've held very constructive relationships with governments from either side of the aisle, administrations from either side of the aisle. Obviously, what we would be looking for is increasing access to retirement planning, which has been I think increasing over the last number of years in the United States because of the Secure Act 1 and Secure Act 2. But we find it very, very important that more and more people have easy access to retirement planning, and that there are incentives in place for smaller and medium-sized and larger companies to truly help their employees build up their pension plans for the future. On average, still the retirement money, the pot of money per average retail household in the U.S. is quite low, quite frankly. So there's much more to be done to plan ahead.
Lard, thank you very much.
And we hope that regulation will support that.
Right. Lard, thank you so much for taking the questions today and talking us through the numbers. Lard Friese with us, the CEO of Aegon.